More interesting opportunities in this week's top stock picks. Shiraz, we're going to start with you because you have an oil and gas company.
That's right.
A driller.
A land driller. Helmerich in Payne, HP is the ticker. The overall rig count in the U.S. is still below levels we had in mid-2008, which was the prior peak. But it's been steadily improving. The day rates have stabilized. And their outlook by itself may not sound exciting enough, but when you dig a little bit deeper and look at the components of the drilling market, you see that the vertical or more traditional wells that were the majority of wells that were drilled in the prior peak are now slowly losing ground to these more complicated and complex lateral and horizontal rigs. So the horizontal and lateral wells were about a third of the total number of wells that were drilled in the prior peak, and most of the gains now, in fact about 3/4 of all the wells drilled now are in that category. So those drilling contractors that have the equipment that can drill those kind of wells really are in a good position and capturing share from those traditional mechanical rig operators that would drill only vertical ones. And Helmerich and Payne is the best positioned in that space. You could play it with some of the others as well, Patterson UTI and Neighbors, Precision Drilling. All of these guys are kind of in a sweet spot in the drilling area, with them gaining share from the traditional drillers and capturing very high margin long-term contracts. And that's the reason why most of those 3-4 guys, including HP, are either Zacks ranked number 1 or number 2. I like HP better. Their fleet is more capable. They have an excellent balance sheet. They pay a good dividend. And in addition to the U.S. exposure, they recently won a good contract in Argentina. Now, Argentina doesn't really have a good kind of investment friendliness reputation, but they have the second or third best shale resource available outside of the U.S. So HP is well positioned in that market as well. So overall, a very good story that will play out this year and next.
Okay, well, that's all the time we have. Tracy, okay. We have two different definitions for that word, pithy. Fast food you're looking at.
Yes, Wendy's. You don't hear much about Wendy's these days.
Starting to see a lot of commercials for them, though.
Yeah, they're in a big turnaround. They have been putting up some new commercials, new products, and they've been redoing their stores. I don't know about you, but some of them were like the original ones from like 30 years ago.
Right.
So I've seen some of those torn down even here in Chicago, and suddenly there's a new one there, and that goes a long way to just how people feel about, you know, going to the restaurant.
Right.
So they have about 6,500 stores, which is a lot smaller than, you know, their main rivals, Burger King, McDonald's, everyone in that fast food hamburger area. That's a really crowded place right now. But like I said, they are turning it around. They did see same-store sales growth in 2013. That's a very positive thing.
Yep.
And 2014, they're expecting 2.5 to 3.5 same-store sales growth. That's more than what they saw in 2013. Again, another positive thing. They just had earnings, and they reaffirmed full year 2014, which also is a positive thing because the weather.
Yes.
They have a lot of stores in Ohio, Texas, and Georgia. Texas maybe not as bad, but Ohio's been slammed, and they kept their current guidance even with that bad weather. So that's a positive thing. The shares aren't super cheap here anymore. They were a little cheaper maybe a year ago or so, but it's not a bad play if you're still looking for, you know, something that's turning around in the restaurant industry that does have a name brand that's well known.
Interesting, though, out in my neck of the woods in the Chicago metro area, where I'm at, Hardee's now is starting to move in.
Really?
And
that's another name that you don't hear as much of.
They've got two in my neck of the woods, one open already, one coming. It's going to be interesting to see what kind of competition those Wendy stores in some of these areas get from Hardee's. All right, Todd, you've got a REIT.
Yeah, Healthcare Trust of America, HTA is the ticker symbol. I like REITs here. Last year, they were one of the worst performing industries because of, you know, all the taper fears, right? So rising interest rates caused people to sell out of these names. But if you look since the beginning of the year, since the Fed actually started tapering, the 10-year Treasury note, the yield on that has actually come down. And a lot of the fears of spiking interest rates have started to wane, and a lot of investors are moving back into these kind of names. I like Healthcare Trust in particular because they're in a solid, stable business. They own medical office buildings that are predominantly located near hospital campuses. They have over 14 million square feet in 27 states. Very steady performer, as you can expect, being in the healthcare space. They've met or beat the Zacks consensus estimates in 4 of the last 6 quarters, and after their last quarterly report, estimates shot pretty significantly higher for both 2014 and 15, sent it to a Zacks rank of 2, which is a buy rating. So good earnings momentum there, very good dividend. They pay a dividend that yields over 5%, and all that at a pretty reasonable price. They trade about 16 times forward estimates, so there's a little bit of value to go along with the stability here and with that good income. Could be solid total return potential throughout 2014.
Okay, thank you all for that. More stock picks and stock picking strategies on our website, Zacks.com. Link to them right off the homepage if you're not there already. Watching this video, get on over and check them out. With everyone here, I'm Terry Ruffalo.